After Uttar Pradesh, Maharashtra mulls loan waive-off. What is the significance of such farm loan waivers? What are the adverse effects of loan waivers on the economy? Why loan waivers are bad for the farmers? GS Paper 3, Indian Economy, Issues Related to Agriculture. What is the context about? With Uttar Pradesh Chief Minister announcing loan waiver for farmers as part of his poll promise, the debate how such practices affect the Indian economy has returned to the fore. Disagreeing with farm loan waivers, Reserve Bank of India Governor during the first bi-monthly monetary policy statement for 2017-18 said, such waivers undermine honest credit culture, impact credit discipline. He also cautioned that such waivers could lead to state governments borrowing more, which in turn may crowd out private sector borrowers. This comment comes in the context of political parties promising loan waivers to farmers to win elections. What is the significance of such farm loan waivers? Farmers reeling under huge debt burdens will be benefited. The decision will affect the smaller and marginal farmers in particular, as they can now invest in agricultural improvement, without having to restrain themselves thinking about repaying their loans. An artificial reduction in the bad loan burden of banks to an extent, as they won't be under the obligation to ensure repayment. What are the adverse effects of loan waivers on the economy? Impact on fiscal deficit. With the government repaying loans to banks on behalf of farmers, its expenditure books get bloated. This in turn affects the finances of the government, thus increasing its fiscal deficit. Fiscal deficit is the difference between the total revenue and expenditure of the government. Impact on loan dispersal process. The repayment of loans by the government is a slow and gradual process, with multiple checks being carried out to correctly identify and ascertain the eligibility of beneficiaries of the scheme. This will hit the bank loan books while they close their accounts at the year-end quarter end. Impact on repaying of loans. With the government's decision to waive off the loans, there remains very little incentive for farmers who want to pay back. When farmers already know political parties will compete for their votes promising loan waivers in the next poll campaign, they are less likely to repay loans to the banks even if they have the capacity to do the same. Impact on spending on development. The funds which could have been used to meet the long-term infrastructure and development needs of the state are diverted to repay the loans of farmers. This will affect the progress of the state which resorted to farm loan waivers. Why loan waivers are bad for the farmers? For the short term they can reclaim his money, but after that he becomes non-bankable. The banks tread a cautious approach while they give loans to farmers on fears of them going bad. So, the next time a defaulting farmer applies for a loan, he may face delay in sanctions, high collateral requirements, reduction of quantum of loans, lengthy and complex documentation requests, etc. The defaulters are likely to be entertained lesser next time they knock the bank's doors for agricultural needs.